Welcome to PhillipCapital's Weekly Market Watch. During the recent G20 meeting, the International Monetary Fund decided to sell gold to raise billion for low-income countries. Today, we have Mr. Adrian Koh from Phillip Futures Investment and Trading to share more. Adrian, how have the recent talks of IMF gold sales affected gold prices?
In the recent G20 meetings, leaders came to a decision to actually raise funds for the IMF by selling 403 tons of gold. And in a long-term perspective, that shouldn't actually place much of a disruption to the gold markets, as the IMF has a systematic responsibility not to actually disrupt the gold markets. And over a long period of time, they will actually spread out their gold sales. So by right, that shouldn't actually put much of emphasis on the gold markets in the long term. But in the short term, the markets actually reacted to the news of the gold sales, and markets actually come down to about 860 levels, but have actually bounced up quite a bit.
What are some of the factors that led to the recent decline in gold prices?
Some of the other factors that actually affected gold prices towards the downside include the rise in the stock markets. Dow Jones and S&P is actually up about 20% since the mid-March lows, and that has sort of increased investor optimism and bring back risk appetite into the picture. So we are seeing outflows from actually safe haven plays such as gold, and this has actually put a bit of downward pressures on precious metals.
What is the long-term outlook on gold now that we are back below the 900 levels?
We are actually positive on the longer-term outlook for gold prices based on a couple of factors. Firstly, the quantitative easing measures as well as the large economic packages taken by various governments as well as central banks is likely to put excess liquidity into the system. And when that happens, it actually brings back inflation in the longer term, and that will actually push gold prices higher in the future.
What about the near-term outlook?
For the near-term outlook, gold is likely to continue to trade in a large volatile fashion as safe haven outflows, gold scrap selling, as well as strong investment demand is likely to keep it in a large trading band of about 850 to about 960 an ounce. Now that we are below the 900 an ounce mark, gold is likely to head lower and in a downtrend fashion towards the supports of around 850 to 860.
Thank you, Adrian, for your time. That's all we have for today. Join us next week for more market updates.